Welcome back to Talk Tickers, where we break down earnings calls so you don't have to. Today, we are diving deep into Johnson Controls JCI
JCI.
first quarter 2025 report. And let me tell you, things are heating up, pun intended.
Yeah, good one.
So for those of you who haven't had a chance to really pore over the numbers,
Right.
JCI had a stellar Q1.
Yeah.
They crushed earnings estimates, raised guidance for the year, and their backlog is bursting at the seams.
Totally.
What's driving this success? Well, it seems like a perfect storm of operational excellence,
Yeah.
strategic focus on high-growth markets, and maybe even a little bit of good fortune thrown in for good measure.
For sure, for sure. What's really fascinating to me is how JCI is capitalizing on some major trends, like the explosion of data centers.
Right.
Remember these facilities need massive cooling systems
Oh, yeah.
to keep all those servers from melting down.
For sure.
And JCI is becoming the go-to provider.
Right. Their global product segment saw a whopping 15% organic sales growth. And a significant chunk of that is directly tied to data center demand.
Uh-huh.
They even mentioned customers accelerating orders ahead of potential tariffs. So clearly there's a sense of urgency to get these projects up and running.
Totally. And it's not just about selling the equipment. JCI is also locking in those lucrative long-term service contracts.
Oh, yeah, for sure.
Ensuring a steady stream of recurring revenue, that's a smart move,
Yeah.
especially in a market that's prone to cyclical swings.
Okay, let's talk about the elephant in the room.
Yeah,
The CEO transition, George Oliver is stepping down.
right.
And Joachim Wiedemannis,
Right on my
formerly of Danaher, is taking the reins.
Yep.
What do you make of this change, and could it disrupt JCI's momentum?
Well, on the surface, it might seem like a big shakeup, but I think JCI has orchestrated this transition very carefully. Wiedemannis comes from Danaher, a company known for its operational discipline and focus on scaling businesses.
And if you look at JCI's strategy, they're all about operational excellence and expanding their reach in these high-growth markets, so it seems like a pretty good fit.
Exactly. Oliver even expressed confidence that Wiedemannis is the right person to capitalize on JCI's current momentum. So there's definitely a sense of continuity here. Of course, only time will tell how this new leadership will impact the company's long-term trajectory.
Now, while Global Products was the star of the show, the Building Solutions segment also put up some impressive numbers.
Absolutely.
Orders are up a healthy 16% with double-digit growth in both systems. A&D service, what's fueling this growth?
Well, it's a combination of factors. First, you have the ongoing strength in data centers, healthcare, and manufacturing. Those sectors are investing heavily in building upgrades.
And let's not forget about the push for energy efficiency and sustainability. Building owners are increasingly looking for solutions that can help them reduce their environmental footprint and save money on energy costs. JCI is well positioned to meet those needs.
Absolutely. And their record backlog in building solutions suggests this trend is only going to accelerate. That said, it's worth noting that some of this backlog could be attributed to supply chain constraints, which is something we'll want to keep an eye on.
All right, let's talk margins. JCI blew away expectations with a whopping 740 basis point margin expansion in global products in the EMEA region. For those keeping score at home, that translates to a more than 7% increase in profit margins, a staggering achievement.
Huge. And they're expecting over 80 basis points of margin expansion for the full year, exceeding their previous forecast. This outperformance is driven by a combination of operational efficiencies, a favorable product mix, and their strategic shift toward higher margin service contracts.
It's remarkable that they're achieving this kind of margin expansion while also navigating a challenging macroeconomic environment with potential tariffs on the horizon. Speaking of tariffs, how is JCI preparing for this potential headwind?
Well, they're taking a multi-pronged approach.
Okay.
First, they're working on regionalizing their supply chain to reduce reliance on imports, which could be subject to tariffs.
But that's a smart move.
Mhm.
Diversifying their sourcing can help them mitigate some of the risk.
Exactly. They've also got some price protection built into their existing backlog, which will cushion the blow in the short term.
Yeah.
And as we mentioned earlier, they're seeing some customers accelerate orders to get ahead of any potential price increases.
Right.
So they're not just sitting back and waiting to see what happens, they're actively managing the situation.
Everyone's talking about data centers, but JCI made it clear that they're not putting all their eggs in one basket. They're seeing strength in other areas like healthcare, manufacturing, and even infrastructure.
I think that's a key takeaway here. They're diversifying their revenue streams, which makes them less susceptible to fluctuations in any one particular market.
And they're investing heavily in their workforce, particularly their field technicians. They're leveraging AI to boost technician productivity and improve customer satisfaction, which is a win-win.
That investment in AI is particularly intriguing to me. If they can successfully integrate AI into their service operations, it could give them a significant competitive advantage. Imagine being able to service more customers with the same number of technicians. That's a game changer in terms of scalability and profitability.
Absolutely.
Yeah.
It's clear that JCI is firing on all cylinders right now. They're executing their strategy, effectively capitalizing on market trends and managing risks proactively.
They're certainly in a strong position, but the big question is, can they sustain this momentum? The global economy is facing some headwinds, competition is fierce, and the new CEO will have some big shoes to fill.
That's a great point. Let's shift gears for a moment and talk about this new CEO, Joachim Wiedemannis. His background at Danaher is fascinating.
He built his career there, rising through the ranks and eventually leading several of their operating companies. Danaher is known for its Danaher Business System,
Great.
which emphasizes continuous improvement, lean manufacturing, and a decentralized management structure.
So what does that mean for JCI?
Well, it suggests that Wiedemannis brings a wealth of experience in operational excellence and driving profitable growth. He's also familiar with a decentralized model, which aligns well with JCI's structure. They've empowered their regional businesses to be agile and responsive to local market needs, and I expect Wiedemannis will continue that approach.
That makes sense. It sounds like he's a good fit for JCI's culture and strategic direction. But how will he tackle some of the challenges facing the company? For example, we've talked about tariffs, supply chain issues, and the need to diversify beyond data centers.
Those are definitely key areas to watch. On tariffs, I think Wiedemannis' experience at Danaher will be valuable.
Mm-hmm.
They've navigated complex global trade environments for years, so he's likely to bring some insights and strategies to the table.
And on supply chain issues, it sounds like JCI is already taking steps to regionalize their sourcing, which could help mitigate some of the disruptions.
Right, and that aligns with the broader trend of companies looking to build more resilient supply chains. It's not just about cost anymore, it's about reliability and flexibility.
What about diversifying beyond data centers? It's a huge growth market for JCI right now, but it's also somewhat concentrated.
I think they're aware of that risk. They
Hmm.
highlighted their strength in other areas like healthcare manufacturing and infrastructure. The key will be to continue investing in those areas and developing solutions that meet the evolving needs of those markets.
One area where JCI seems to be ahead of the curve is their investment in their field technicians and the use of AI to enhance their productivity. That seems like a smart move, especially in an industry facing a skilled labor shortage.
Absolutely. It's not just about finding enough technicians. It's about equipping them with the tools and technology to work more efficiently and effectively. AI can play a huge role in that by automating tasks, providing real-time insights, and optimizing workflows.
It's almost like giving those technicians superpowers. They can diagnose problems faster, resolve issues more effectively, and ultimately provide a better customer experience.
And a happy customer is a loyal customer, which translates into recurring revenue and long-term growth.
So looking ahead, what are some of the key things you'll be watching for from JCI?
First, I'll be curious to see how the new CEO shapes the company's strategy. Will he maintain the current course, or will he bring in new ideas and initiatives?
And how will he address those challenges we talked about, tariffs, supply chains, diversification?
Exactly. I'll also be watching their progress on integrating AI into their service operations. If they can successfully leverage this technology, it could give them a significant competitive edge.
And of course, we'll be keeping an eye on their financial performance. Can they maintain this momentum, or will they face headwinds from the global economic slowdown?
Those are all important questions. Overall, I'm cautiously optimistic about JCI's prospects. They've got a solid foundation, a strong leadership team, and they're executing well on their strategy. But as with any company, there are risks and challenges ahead.
All right, before we wrap up, let's have some fun time for our This Is Not Financial Advice segment.
Always a disclaimer, but always entertaining.
So based on everything we've learned about JCI today, what's one outrageous but plausible trade idea that's bouncing around in your head?
Okay, here's one for you. What if JCI decides to spin off their building solutions segment into a separate, publicly traded company?
Whoa, that's a bold move, but it's not entirely out of the realm of possibility.
Right. It would allow them to focus on their core strength and potentially unlock value for shareholders. Imagine a pure-play building technology company laser-focused on smart buildings, energy efficiency, and sustainability. That could be a very attractive investment opportunity.
And with their record backlog and strong growth in that segment, it's certainly got the potential to succeed as a standalone entity. Of course, this is all just speculation.
purely hypothetical.
Yeah.
But it's an interesting thought experiment, and it highlights the potential that JCI has as they continue to evolve and adapt to the changing market landscape.
Okay, so we've got JCI potentially spinning off, Building Solutions creating a building tech powerhouse. What kind of trade would you consider around that?
Well, if you believe in this scenario, you could start building a position in JCI, now anticipating that the spinoff would unlock value and potentially drive the stock price higher. And once the spinoff is announced, you could then evaluate the prospects of the new company and decide whether to invest in that as well.
So you're essentially betting on JCI's ability to create two successful companies out of one. That's a gutsy call. But hey, high risk, high reward, right?
Again, this is all purely speculative. Do your own research, consult with a financial professional, and make informed decisions.
All right, listeners, there you have it. JCI is crushing it. A new CEO is at the helm, and there's plenty of potential for both growth and disruption in the years to come. But remember,
This is not financial advice.
we're just two passionate investors sharing our thoughts and having some fun with hypothetical scenarios.
Do your own due diligence and invest responsibly.
Until next time, happy investing, everyone. It's fun to think about, though.
Oh, for sure.
But even without a spinoff, JCI is operating in a space that's ripe for innovation and growth.
Exactly. They're essentially at the intersection of several major trends. The rise of smart buildings, the increasing demand for energy efficiency, and the growing importance of sustainability.
Right, and as those trends continue to gain momentum, JCI is well positioned to benefit. They've got the technology, the expertise, and the global reach to be a major player in this market for years to come.
Couldn't agree more.
It's pretty remarkable to see how they've evolved from a traditional industrial conglomerate
Right.
into a leading provider of smart building solutions.
It's a testament to their ability to adapt, innovate, and anticipate market shifts.
Yeah, so for investors looking for exposure to the smart building megatrend, JCI is definitely a company to watch.
For sure, they've got a lot going for them, and if they can execute on their vision, the future looks bright.
All right, well, that wraps up our deep dive into Johnson Controls Q1 2025 earnings call.
Yeah, we covered a lot of ground today, from their stellar financial performance to the new CEO transition and some wild speculative trade ideas.
As always, a huge thank you to our expert for sharing their insights and analysis.
My pleasure. It was a great discussion.
And to all of you listening out there, thank you for joining us on this journey into the world of earnings calls.
Remember, knowledge is power, and the more you understand about the companies you invest in, the better equipped you'll be to make informed decisions.
But before we sign off, we have to say it one last time for the people in the back.
This is not financial advice.
We're just two passionate investors sharing our perspectives and having some fun along the way.
Do your own research, consult with a financial professional, and invest responsibly.
Until next time, happy investing, everyone.